suspension or Twitter restriction or whatever has been lifted? Have you been able, for those of you watching me right now, have you been able to log in? In fact, some people will say that government just banned themselves because many Nigerians were still on Twitter through other means. But a lot of people have their own analysis as to why the government did what it did last year, June, and perhaps why it is lifting the suspension today. But whatever it is, the restriction has been lifted. Today on the program, we'll be looking at the startup bill that has been proposed by the government. That's the federal government. The Federal Executive Council approved that, and we hope that the National Assembly will do the needful. I will have two guests joining me shortly to take a look at that. Tosi Fanirodada, the Managing Director at Endeavor Nigeria, as well as Samuel Okwada, the co-founder and the CEO at Remedial Health. They will be doing justice to the topic in a short while. But you know what to expect here, or what I always say on the program. So join us on all our social media platforms. You can kickstart with joining us on Twitter now and let the conversation start coming. I want to tweet with you this morning. You can do that at Moneyline TV on Twitter. It's such a good thing to say, because sometimes, or most times, when I say join us on our social media platforms, I don't talk about Twitter. But I also tell the government, you guys got to lift this ban. And they've done that. So, anyway, you can join us on Twitter. You can also join us on Facebook. Go to our YouTube channel right about now and subscribe, Moneyline with Nancy TV. There you get knowledgeable resources and check out other interviews on different topics which we have handled. But first of all, let's quickly take our business news. President Muhammadu Buhari has lifted a ban on Twitter operations in Nigeria, which was enforced on January 13, 2022. Kashifu Abdullahi, the Director General of the National Information Technology Development Agency and Chairman Technical Committee Nigeria Twitter Engagement, made the announcement in a press statement on Wednesday. According to the statement, the federal government urged Twitter to comply with certain criteria before lifting the ban, and the Social Media Corporation agreed to them. The agreement will be implemented this week. The federal government has stated that its January 17th decision prohibiting all unvaccinated workers from entering government buildings remains in effect, and that it will not be reversed. According to Iharu Atta, the FCT Minister's Senior Special Assistant on Monitoring, Inspection and Enforcement, the ministry is pleased with compliance so far and has urged employees to be vaccinated. The federal government says the revised national policy on micro, small and medium enterprises and the 2020 survey on micro, small and medium enterprises will provide suitable platform for initiating and implementing special interventions for the subsector. This was revealed at the media launch of the report on the national survey of nano, small and medium enterprises in Abuja. Emmanuel Aldo has the details.
The Director General, Small and Medium Enterprise Development Agency of Nigeria, Dikko Umar Orada, at the launch of the report on the National Survey of Nano, Small and Medium Enterprises, reveals that the major source of worry of the agency is the availability of data that clearly profiles nano, macro, small and medium enterprises, or adequately explain the peculiar challenges they face in their operating environment, hence the need for more specific data for better planning and deeper delivery of sectoral interventions.
Despite their numerical dominance, Nigerian NMSMEs contribute less than 10% to non-agricultural GDP. This situation has been attributed to their unstructured and highly individualistic tendencies, near total disconnect with large, high level of informality, their simplistic yet uncompetitive product, high dependent on public infrastructure, their inability to access business support services, and so on. In 2017, National...
Earlier, releasing the report, the Director General of the National Bureau of Statistics, Dr. Simon Harris, said the 2020 National Nano, Micro and Small Medium Enterprises Survey report reveals a significant strength in the total number of nano, macro and small enterprises in Nigeria, which cannot be totally divorced from the open global competitiveness that has negative impact on businesses.
And that COVID-19 pandemic affected tremendously MSMEs in the country, showed that 53.2% of small and medium enterprises and 37.3% of medium enterprises were temporarily closed during the period. The major reasons reported for closure was the total lockdown of the economy then, and then the restriction in movement, which consequently led to increase in the cost of transportation nationwide. MSME's contribution to GDP witnessed a decrease of 3.5% in the year 2020 when compared to what was recorded in 2017. Also, there was a reduction in the number of MSMEs in 2020, with 2020, as earlier mentioned, recording 39,654,000 and 385 establishments, as against the number recorded in 2017.
Towards addressing some of these factors that have negatively affected the subsector, the duo said the revised national policy on nano, macro and small medium enterprises have put in place a national, regional, state and local government coordination mechanism to ensure that issues like funds, infrastructure, compliance, skill development are properly and effectively tackled. Emmanuel, how the reporting for Moneyline with Nancy.
According to the National Bureau of Statistics capital imports report between January and September 2021, the United Kingdom and South Africa topped at the list of source nations for Nigeria's capital inflows, accounting for 64.9% of the total capital importation recorded by Nigeria during the period under review. Nigeria received $4.5 billion in capital inflows during the first 9 months of 2021, a 48% decrease from the $4.61 billion received during the same period in 2020. Capital imports decreased by 78% compared to the pre-pandemic era, with $20.19 billion reported in the same period of 2019. The Kano State Executive Council has authorized 500 million in counter-funding for the 6-year World Bank assisted project Agro-Climatic Resilience in Semi-Landscape. Mohammed Gaba, the Commissioner, said the project seeks to increase the adoption of climate resilience, landscape management practices, livelihood in arid and semi-arid watersheds in Nigeria. The need to reform the entire tax architecture in Nigeria has been emphasized as a means to build credibility and trust among citizens. Olusegun Onigbide, who is the co-founder of Budget, made the emphasis while speaking on the 2022 budget. Take a
Nigeria is able to change its paradigm of its whole revenue architecture and pay extra attention on taxes. And if you are going to pay extra attention on taxes, it won't just be, oh, we're going to tax people to death. We also have to pay extra attention on sectors, on environments that will generate taxes. If we have a vibrant Nollywood environment, we'll double down on that. If we have a vibrant music industry, we'll double down on that. If we have a digital media that is expanding, we will double down to make sure that that's scalable. If it's going to be agriculture and we do it in a way that is mechanized and is efficient. If it's real estate, yes, we will have to pay attention to that. So the entire tax architecture of Nigeria needs a reform. It's not just us saying we're going to reform PIA. The entire tax architecture, which component of government, which tier of government is getting, needs significant reform. And now being able to build accountability mechanisms and trust mechanisms into all of that, because it's very, very obvious now. We will not generate by the projections that we have for 2022. The entire revenue is around 3.3 trillion. And then projection that we have for debt service, and that's a very, very huge assumption that we have made here, to even have 3.3 trillion.
According to the International Monetary Fund, the high volatility and the price of cryptocurrencies, as well as their increased co-movement with equity markets, welcome back. The Nigerian exchange was supported by gains in large counters such as MTN Nigeria and Dangote Cement on Wednesday. Dangote Cement announced the commencement of the second tranche of share buybacks of up to 170 million of fully paid up shares, which will be purchased. Starts on January. Is it January 19? Yes, January 19 to end on January 20. So for Dangote Cement shareholders, that is for you to take note. We saw MTN up by 2.15%, and that pushed the benchmark all share by about 171 basis points to close at 44,608. The year-to-date return of the market settled at 4.43%. That's not a very bad one to start the year. The market capitalization closed at 24.03 trillion naira. Because of the bullish trend that we saw in the markets yesterday, especially on the back of the news of Dangote Cement, the news took the capitalization of Dangote Cement to 4.69 trillion naira from 4.4 trillion naira. The volume of shares traded dropped to 266.33 million units, while the value also dropped to about 3.82 billion naira. Now let's move to the market diary very quickly. Looking at other markets, The buyback and the overnight rates fell by about 50 basis points to 15% and 15.75% respectively. Interbank rates are expected to decline further as liquidity level continues to remain stable. The DMO sold 57.55 billion naira worth of notes at the NTB auction on Wednesday. The 91-day, 182-day and 364-day notes were allotted at around 2.5%, 3.45% and 5.5% respectively. Analysts expecting that the Treasury bills market will return to a quiet trend today. Meanwhile, the FGN bond market, it was mostly quiet on Wednesday. We also expect the market to be mostly weak today. For the Eurobond market, it saw some kind of respite from the bearish trend as the U.S. Treasury markets continue to influence market direction. For the FX market, the Naira appreciated against the US dollar to 416 Naira at the INE window, while the foreign reserves, according to the data from the central bank, FX reserves for the country stands at $40.50 billion on the 11th of January. All right, let's move over to other African market. The GSE dropped as global investors focus on the dramatic U.S. inflation data that came out on Wednesday, indicating that we've seen a historic inflation data from the United States, about 7%. Looking at inflation data for Ghana, inflation data for December hit about 12.6%, and based on price increases in housing, fuel, as well as the electricity market. However, the Ghanaian government says it seeks 3.79 billion Ghanaian cedis from the domestic debt market. The Ghana's debt to GDP ratio as of the 2022 budget stands at 7.8%. As at September 2021. Still in Ghana, cocoa carriers say they will resume duty after a week-long strike, and that would definitely impact the cocoa market. If we move over to the United States, stocks were little changed today. Our stock futures. On Wednesday, we saw major averages rising despite the CPI inflation report. The December CPI inflation data rose to 7% year-on-year, and this move is the highest since June 1982. In fact, since Ronald Reagan's time. Major banks are also expected to kick off Q4 earnings on Friday, so we'll be watching banks like JP Morgan Chase and the likes of them. Their earnings would come out on Friday. Global markets are digesting the latest red hot inflation reading from the US. The reading came out on Wednesday, so we're seeing global markets trying to digest that data. For oil prices, the commodity is trimming gains from previous sessions. Brent crude is at $84 while WTI at $82 US. Gold prices are rising today near a one-week high as the USD, which is the US dollar, and the Treasury yields retreat. Gold is considered an inflationary edge, but the yellow metal is highly sensitive to rising US interest rates, which increase the opportunity cost of holding non-yielding bullion. I think that's it for the markets right now. Yeah, that's just a quick morning brief for you. Let's quickly take a break, and when we come back, Tosifano Dada, the MD at Endeavor Nigeria, and Samuel Okwada, the CEO and co-founder at Remedial Health, will be joining me virtually. We'll be looking at the Nigeria Startup Bill being proposed by this administration. What should we expect, and what should the collaboration look like? We'll be right back. Don't forget, send your comments on Twitter. Yes, we're on Twitter, Moneyline TV. I'm also on Twitter, so just send your comments and your thoughts at Nancy Ilo-Naji. We'll be right back. All right, welcome back. As you can see there from the screen, Tosifano Dada, MD Endeavor Nigeria, Samuel Okwada, co-founder and CEO at Remedial Health. Both are joining me right now from Lagos. Hello, Tosi. Good to see you. I guess we'll start this with a very good smile to encourage us this morning. Good to see you both. Hello, Samuel. How are you guys doing?
Hi, Nancy.
Hi, Nancy.
Thanks for having me on.
Hi. Where should we start from?
I'm doing well. Thank you so much for having me on.
Yes, I guess we should start from the elephant in the room. Is it an elephant now? Perhaps it's a bird. It's a bird, a big bird, perhaps like the eagle. Are you back now on Twitter, or you were not even away in the?
Now that people can tweet without VPN.
Without VPN. Samuel, what's your own view? Were you away, or you weren't away, just like Tosa said?
So I would say in Nigerian parlance, we thank God though. It's been a long time. There have been talks about it for a while, coming back. So we're glad that it's finally back. As Tosin said as well, the world is a global village, yeah? And apart from tweeting, people also work on Twitter, people also sell on Twitter, and that ban definitely slowed things down. I wouldn't say it stopped us, myself included, but yes, definitely affected business.
Okay, Samuel, let me stick with you a bit. How did it affect your business, and how do you think it affected startups or even scale-ups? Just will be discussed, as we'll be discussing in a bit. How did it affect you, and how do you think it has affected businesses and the return right now of Nigeria Twitter? Because a lot of us were tweeting from different places, Netherlands, UK, France, US, and all of that, while you were still domiciled in Nigeria.
Yes. So, using my business as an example, I wouldn't say it affected my business, but it definitely affected my ability to reach out to, for example, other founders in other countries that I felt maybe were in the same shoes as I was, and I needed some advice. I have gotten an investment off Twitter, so I am an investor, connected, we talked, and he was happy with the business and he invested a small check. But that's the power of Twitter. And when you're not able to do that freely, definitely slows things down. Now, for other businesses, for example, in the past, I have purchased shoes from Twitter. I've purchased food from Twitter. These businesses are selling their products on Twitter. And the ban definitely slowed them down. Again, I say it didn't stop them. We're resilient people, especially the young people of Nigeria. But yes, definitely slowed it down.
Okay, then, Tosi, do you have anything to say concerning that? On how perhaps you think the restriction on Twitter that we've seen in the last over 200 days impacted businesses? Because I know, at least for you, that is a chief executive, you interact daily with entrepreneurs and startups and all of that. What were the kind of echoes or the things that you were being told, at least in the last 7 months?
I think the biggest one would be reach, and I don't know if any analysis has been done, but I think it would be interesting to see the engagement on Twitter before the ban and after the ban. I think it's also important to recognize that not everyone is able to afford VPN as cheap as some people think it might be. And so that definitely affected reach. I think also companies were on the fence. Companies were not sure if they should tweet, knowing that there was a ban and if they'll be in trouble with the law. And so you had a lot of individuals tweeting, but then their companies not really tweeting. So I think that also affected the reach of people that they would have done business with, for instance, just like how Samuel had earlier pointed.
Okay, now let's talk about the startup policy that the government is proposing. And Tosi, let me still stick with you. Is it good news? Because it seems okay, the initiative is from government as well as perhaps leading tech experts. How did you take this news when you saw that? And don't forget that this startup policy, Nigeria startup bill rather, would replace the investment and the startup policy.
Yeah, thank you, Nancy. So first of all, I should actually say that I don't know much about the investment policy, the national investment policy that we had before for startups. I don't know if it was implemented, and I don't know any beneficiaries. However, I do think that the Nigerian startup bill is very important for us. It's very important because we need to create an enabling environment for these startups to thrive. And we've come to see the power of startups. I mean, if you just think about last year and how difficult last year was for a lot of businesses, when you think about the funding that came into Nigeria for startups, startup companies raised over $1.5 billion. And so that just shows you the power of startups and what they can do. I think at the end of the day, we have the same meters on everyone: job creation, wealth creation, and overall prosperity. And I think the government coming together and saying that they want to set up the startup bill is a good step. The most important thing, I think, is inclusion. And the fact that they're preparing this bill or developing this bill in collaboration with the ecosystem, with key stakeholders, helping to develop, helping to raise awareness and engaging on this bill, I think it's super important. And if you just think about other countries, other African countries that have done similar initiatives, from Senegal to Kenya to Ethiopia, and another country that I can't remember right now, the outcome was good. It helped their ecosystem. It helped develop their ecosystem. It helped people invest in their ecosystem. It gave entrepreneurs sort of like the assurance and encouragement to be able to start new businesses, and also the backing from regulators as well.
Samuel, let me get your view. Are you on the same platform with Tosin, that you did not know that there was an investment and startup policy earlier?
Okay, so yes, even in preparation for this interview, I still went online to search for this policy. I couldn't find it. And that says a lot about the policy, which is a policy which is geared at the digital economy, cannot be found online. So the startup bill, I would say, is an excellent bill. I particularly like the approach that was taken in forming that bill, a bottom-up approach. That is engaging everyone within the ecosystem, not just some people sitting in Abuja, for example, coming up with a bill that they think will work for startups. Now, as much as I would commend everyone, so the volunteers, to the government as well, for this bill, I would say there's still a long way to go. We have to get it passed by the National Assembly. We have to build some other frameworks around this bill. And then implementation. I would say one thing I've heard when talking about this bill to people is everything dies during implementation in Nigeria. And we're definitely looking forward to seeing this being implemented. As Tosin mentioned, Nigeria we raised over $1.5 billion last year. And this is out of about $4 billion raised in Africa by technology startups. Now, this is without, or should I say, minimal support from either the regulators or the government. Now, imagine what would happen when things are working together for the good of startups, entrepreneurs. Regulators are also able to have the tools to do whatever they need to do. But, you know, I imagine that this will scale up probably 10x within the next 5 years. It already did 5x within the last 5. So it's just going to be an exponential growth. So it is a welcome development, and we definitely want to see it get to implementation.
You know, Samuel, let me stick with you a bit before going back to Tosin. And taking from what you and Tosin said, in fact, talking about the amount of money that came into the country last year alone, startup financing, about 1.7, in fact, it's $1.7 billion last year, trailing behind some other countries. And I think Nigeria is the third leading country in Africa after South Africa and, is it Kenya, I guess, in terms of the ranking. Now, if you take a look at that, these businesses, these startups, did all this on their own, so to speak, without really no government support. What challenges do you think that startups in Nigeria really face, and how should this startup bill address that?
Okay, so as much as we're talking about startups, these startups are new companies, in most cases disrupting old industries. Now, being online or being a technology startup, in most cases, would not prevent the challenges that have faced those old industries from also happening to you. So if I take, for example, Remedial Health, which is my company, we're digitizing the pharmaceutical supply chain in Africa. So think Idumota. Pharmacies have to go into these places to buy products for their pharmacies. And if you take into consideration the time they waste going there, if you take into consideration counterfeits, we're helping to solve all of that using technology. So they can just order on a mobile app or a mobile web app, and we deliver to their pharmacy within 24 hours. Now, as much as there's technology in there, we still have issues around, one, logistics. For us to be able to deliver on our promise of 24 hours delivery to pharmacies and chemists and hospitals, we pretty much have to build our own logistics infrastructure. So that is an example of a challenge that we face. If I take another industry, for example, fintechs, bulk of our funding were mostly for our fintech startups, right? And we have some really innovative entrepreneurs in that sector. The major problem they faced is with regulations. Which regulator do you talk to? You have regulators that have overlapping policies and oversight. So, if to give an example, sometime last year, or was it 2020 now, some apps were pretty much shut down abruptly, if I should use that word. And it was without warning. Now, I understand from the side of regulators their need to protect consumers. But you see, it can always be done with a human face. It can always be done with the consideration that investors are looking at this market, founders are going into this market. Are we destroying confidence? And frankly, that is what happened when those apps were shut down. So I'm saying if a little bit of engagement with those companies would have gone a long way ensuring that confidence remained. We can also use the Twitter ban as an example of that as well. Destroying confidence, investor confidence in the country, destroying founder confidence in building startups in Nigeria.
All right, Tosin, let me bring you in at this time. I've been looking at what the government is proposing concerning the startup bill, and I'm looking at how it would enable, what kind of frameworks should the government put in place to enable the innovation ecosystem thrive more than it is thriving right now. From your own point of view, because this is your job daily, you interact with more of those entrepreneurs every day than I do. What kind of regulatory framework do you think that the government should have in mind, especially as the bill, or especially as the National Assembly will be considering that? I do hope that the House, or the National Assembly rather, would have a lot of information and would engage with a lot of you in that space to create the kind of enabling environment for it to work.
Absolutely, Nancy. I think the first thing the bill should do is actually label companies. I think the bill should differentiate between startups and scale-ups, because different categories have different challenges, and you should be able to address those challenges individually. If I start with startups, for instance, there's challenges around infrastructure. Entrepreneurs that are just starting need access to power, and they need access to internet, fast internet. These things are expensive for an entrepreneur that's not making money yet. So the bill should should have a framework around infrastructure for early stage businesses. Another challenge is talent. There's so many people interested in tech talent, and I found out we did a lot of work in Lagos State while I was at the Lagos State Employment Trust Fund, and they can't afford the training. So the bill should actually enable some sort of capacity building for people interested in tech, for early stage companies. And then another challenge is capital. Now, we did say that yes, Nigerian startup companies, or scale-up companies rather, raised $1.7 billion. The truth is, a lot of that money was raised by growth stage companies. And so if an entrepreneur is just starting out, it's sometimes difficult for them to have access to early stage funding. And so that's where this bill can help with a grant or loan or some sort of access to financing for early stage companies. And then if we then move to scale-ups and think about their challenges, scale-ups need access to market. You know, a fantastic example would be if the bill can come up with a public procurement preference for tech startups. So if the government is going to give any contract or procurement, there's a small set aside for scale-ups and even for startups as well. So I think it's important that we label the categories of companies and their life cycles, and then think about the challenges in each life cycle, and then have solutions to address those challenges.
Tosi, I like that you brought that up, that there should be a difference between startups and scale-ups, really, because for you to get to a scale-up level, at least you've passed the startup stage, as it were. At least the scale-up is like the senior brother or senior sister of startup, as it were. But also in the ecosystem, I know that for startups, they do consider themselves different from small businesses or micro businesses. Yes. Why do you think it is so? Because if we're talking about startups, I also do need to put that caveat or say the difference. We know that there are startups in different areas or different sectors or different businesses that are being tech enabled. So we have like the tech as it were. We could also have agricultural business or agri-tech, ed-tech, and whatever you have, but technology enables those businesses. So at the end of the day, why is it that startups think that they are different from small businesses?
Startups are different from small businesses. Startups are tech, like you just rightly said, tech-enabled businesses. So they have tech-enabled products, they have tech-enabled solutions, or tech-enabled. A small business might, most times do not. When you think about small businesses, you think about micro businesses, you think about mom and pop shops, for instance, mom and pop businesses with very simple business models. You think about a business with one or two people, one or two employees. When you think about small and medium businesses, you think about businesses with maybe 10 to a maximum of 50 employees. When you think about a startup, you think about a company that has a product that has a potential to scale. And the only way that product is going to scale is through technology.
Okay, Samuel, do you have anything to say concerning that? So if we dovetail from what Tosin has said, that means that perhaps the financing model for startups should also be different from what we see from other businesses. Like in the year 2020, we know that the CBN, for example, came up with different interventions, the TCF, Targeted Credit Facility, and the COVID loans for businesses. From what Tosi has said now, does that mean that startups should have different financing models and different interventions?
Yes, you're correct, Nancy. So, following on from what Tosin said, the major difference, in my opinion, between startups and small businesses is the power of the internet. Yeah. So if I set up shop today in Ikeja, Lagos, where I'm based, maybe I can reach 100,000 customers a year, maybe. with the power of the internet, I can reach 1 million. So not just people in Ikeja or people who pass through Ikeja. I can reach people as far as Kano. I can reach people as far as Katsina. I can reach people as far as Port Harcourt. That's the major difference. And with startups, they have the power, because of the power of the internet, they're able to scale exponentially, right? So you typically see maybe a small business in terms of revenue growing maybe 5% year on year, 10% year on year. With startups, you're probably talking 300-400% year on year, right? So that also leads back into the sort of funding that startups require. And we have this sort of funding already in Nigeria. It's just, one, investor confidence is not so strong, one. Two, people are just getting comfortable with angel investments. That is, investing a small amount into companies in hope for a return, or maybe not, depending on if the business works out. Now, for the government, the interventions that were done last year, I would say they were very helpful. If I'm being honest, I haven't heard of anyone who got any of this funding, but that sort of funding would still apply to startups. What I would advocate for is the government putting in regulations, enabling environment, so basically making Nigeria more startup friendly so that investors are interested in putting in money into companies. There are already investors who want to do this, right? But again, the challenges of doing business in Nigeria, the challenges, and again, it's a new sector actually. So people are just getting comfortable with making those investments. If government steps out of the way, give these investors the confidence, they will do their part as well. And then the government can continue to do some of the interventions that it has done for small businesses, which startups, I imagine, will still take part in.
Let me come back to you, Tose, and take it from where Samuel stopped in terms of the kind of funding that we should expect, as, like a government seed, a government-backed kind of funding to enable startups to thrive and possibly grow. And when these startups grow, definitely they will employ more people. You know, they get bigger. We saw what happened with Paystack in 2020, even in the midst of the pandemic. That was one good news. We know that there are some companies now that have that unicorn status here in Nigeria, not because necessarily of what the government has really done, but because of the sheer commitment and dedication of these young men and women. So what kind of government-backed seed funding are you looking at for startups, especially as the startup bill will be debated soon?
I will be very excited if they come up with a government seed funding for early stage startups. I think it would even make more sense if it's a grant, just because I don't think government should own businesses. I think the government's role is to be an enabler, not to be an equity partner. So I think it would make sense if it's actually a grant. I think it would also make sense if there's some sort of there's intentional focus on women-led businesses, because we've come to find out that there's a huge gap, a huge financing gap for female-owned businesses. So I think it's important that the government is intentional about funding early, super early stage female-owned businesses. And something that Samuel mentioned, true, you don't have to do it alone. I think the startup bill should include in its framework an incentive for angel investing, an incentive for corporate investors. It could be, and I don't know what it would look like, to be honest. I'm not working on this bill with the team. But something around, it could be tax exemptions, it could be something around exempting capital gains. I don't know what it would look like, but something to encourage investors, to encourage local investors most especially. And I also think something around encouraging corporate innovation. Now, yes, Samuel did mention that we're disrupting, a lot of companies or startups are disrupting old companies. But the truth is, a lot of these old companies have the data, they have the market, and they have the customers to test and adopt some of these products that the startup guys are working on. So I think some sort of incentive around encouraging corporates to adopt technology, to adopt some of these products that our founders are coming up with, and to test it would be super helpful if it's also included in the framework.
If we take a look at, Samuel, if we take a look at some of the things that we expect the startup bill to address, it may lead to, I saw that it will lead to subsidized local data facilities. Of course, this is backed by technology, data expenses or data costs in Nigeria. It's still quite huge compared to some other countries. If you also take a look at what the startup bill is expected to get through with tech packs. How do you guys feel about this? Tech packs, have it in mind that the financial system is also putting together an international financial center, so to speak. So are we going to be expecting like an international tech center for those of you in that ecosystem? Just perhaps is it a bigger version of Yaba or a more organized version of Yaba?
Okay, so what you just mentioned is actually captured in the bill. The government plans, or at least what is currently captured in that bill, states that tech packs will be government providing an enabling environment. When you have more competition, prices will drop. If we can have, for example, more mobile networks, we can have more data providers, I expect that data would drop considerably. To give you an example, in setting up our office in 2013, we were paying on average about 500,000 naira per month for data. Right now, for even 100 times better internet plan, we're paying probably 70,000 naira. Now, that is the difference over a couple of years. Without, I would say, without government really doing anything to drive down those prices. Now, again, an example would be back in 2019, 2013, we didn't have, I would say, angel investors that were geared towards tech as much as we do now. We didn't have accelerators and incubators. I would mention Ventures Platform. They were one of the first incubators in Nigeria. And I could see how the tech ecosystem really progressed from setting up of that incubator / accelerator. Because when you give people that environment to say, okay, you know what, come in, free electricity, come in, free data, feel free to build. Even if you fail, try again. You would get a lot of innovative companies coming out of Nigeria.
Okay. Tosin, as we come to the end of the program, and I'll see if I can also put this in because we're also getting comments on Twitter. But Tosin, talk me through how you think that this startup bill will be a game changer, perhaps in the next few years, if we are able to implement this in terms of revenue generation. And Samuel, I know you're still listening to me. Take this comment on Twitter from Chijoke Kalutu. His Twitter name is Kwashoko. So I don't want to say that. Let me read what I saw. His name, Chijoke Kalutu. He said, how do you legislate startup in an uncertain internet age? So Samuel, that question will be for you. Just speak to me about how you think this will change revenue generation if we get the financing right, as you have said earlier, and the enabling environment right. How do you think that this will change revenue generation? Perhaps FIRS and state IRSs will be chasing all of you. For money.
I like what you said. If we get implementation right, and execution, which is super important. I think, like based on what we've been talking about for the last 20 minutes or so, even with how bad things were in 2021, our startups raised, our tech ecosystem raised $1.7 billion. That tells you something. We have more than one unicorn in our ecosystem. And so if we think about the bill creating this enabling environment, if it actually happens, we can 5x, 10x that number, 20x that number, because we have the talent. Our founders are resilient. Our founders understand our unique problem, and they're working every day to solve that unique problem. And so if they have the right environment and the regulators understand what they're trying to do and understand that we do have the common goal of job creation, wealth creation, and overall prosperity, that would automatically mean revenue generation. Because as the founders sell, make money, scale, they're paying taxes here.
They're paying taxes
at the end of the day. So yes, Nancy, like you said, FIRS would be happy, or LIRS, or whatever state it is that they're paying where they're paying their taxes to. And so, and even beyond revenue generation, I think the most important thing is unemployment. Unemployment is high in Nigeria. People realize how high it is. And we have
Samuel, take the other question, and we've got to go now. How do you legislate internet? How do you legislate startup in an uncertain internet age? Do we still have Samuel there? Okay, I think we've run out of time. I want to say thank you to you both. Can I see you both? Thank you, Tosin, and thank you, Samuel. Let's hope we'll do this sometime soon, because the startup bill is still being proposed, and let's see how the debates will run at the National Assembly, and we'll be here again to talk about that. So thank you very much to you both for joining me today. I've been speaking with Tosin Fanirodada, who is the Chief Executive at Endeavor, and Samuel Lopada, co-founder at the Media Health. So thank you both. That's so much we can take for today's edition of the program. It's Moneyline with me, Nancy. I'll see you tomorrow. Do the best you can be, and do the change that you want to see. Bye.